I've got a great panel here. We're going to introduce them now. First up, I've got Mr. Jeff Garzik, founder of the Hemi Network, one of the oldest longstanding Bitcoin developers, contributions dating all the way back to 2010. So if you dig around the old forums, you'll find plenty of Jeff Garzik posts. Next, we've got Muneeb Ali, co-founder of Stacks. This is a protocol building on top of Bitcoin, looking to add extensibility. Next, we've got Eli Ben-Sasson, founder of StarkWare, an Ethereum and Bitcoin bridge. So once again, trying to bring these crypto communities together. And last but not least, Hong Sun of the Core Network, another L2 Bitcoin application theme here. So let's start. Who can hear me back there? Can you guys hear me in the back? We've got Margaret back there. Margaret, can you hear us? Okay. How many people here are actively building on Bitcoin today? I want to do a show of hands. How many people are building an application on the Bitcoin network? I'm going to look around, make sure we can around the panels. Show of hands. How many people are building on Bitcoin? We've got 1, 2. How many people want to build on Bitcoin? How many people are on another application layer, on another blockchain, and are looking to potentially build on Bitcoin? Okay, we're going to stick with you as we get into the questions here. And how many people are just pro other blockchains and not super interested in what's going on in Bitcoin and are here anyway? No? Okay, that was a joke. Anyway, we're going to get to the panel here and talk about what's going on with this explosion of building in the Bitcoin space. Can you guys all hear me all down there? Okay, great. So the first question is going to be, building on Bitcoin is the opportunity. There's $1.1 trillion worth of capital in the crypto space outside of Bitcoin. Is that the market opportunity here, Jeff, or what's the market opportunity you're aiming at? What's the market opportunity here that you're aiming at? Is it bringing the crypto capital that is in the crypto ecosystem over to Bitcoin?
I'd say the market opportunity for stratified a little bit. Market opportunity for Bitcoin is that it's the root of the crypto tree. It's been around for 15 plus years. It has staying power. If you're going to vote, at the high school prom, most likely to succeed, it's going to be Bitcoin. But naturally, just like any baseband backbone L1, every time you see a spike in fees, you see a spike in traffic, that's undercutting the usability of that for average users. Or as we say, you can't put every coffee payment on the Bitcoin blockchain. And to me, that's just kind of obvious. So from there, you got to build on it. And so you got to build on, you got to build layer 2s, you got to build off-chain validations, you got to build high-speed payment networks, et cetera. And so you've got to plus it on top of Bitcoin itself.
Muneeb, over to you. The question is, are you building for the crypto market, or what do you think the market opportunity is for Stacks today?
I think the way I think about this, if you look at a Solana or an Avalanche or something else, they're all trying to create their own local economies with their own assets. Whereas if you look at something like Stacks, we are really trying to enable BTC to be deployed and used in DeFi or in payments and so on, right? So I would say it's some percent of the total Bitcoin supply. Right? Right now, we're not even at 1 or 2% of BTC supply, but I think at a healthy market size, if you look at Ethereum or something, I think 20-30% of BTC could be deployed on these L2s.
I think I'm trying to tease out whether the panel, we're trying to interoperate with the crypto ecosystem, or we're trying to essentially kind of replace what they're doing. Maybe, Eli, can you help us there?
Sorry, I didn't hear. Can you repeat?
I think the question is, StarkWare, how you think about the crypto ecosystem. Do you think of yourselves as adversarial, or are you trying to kind of interoperate with the crypto system?
With the other...
with the larger kind of crypto protocols that are being built out there.
Yeah, so definitely interoperable. So StarkNet settles both on Ethereum and Bitcoin, and our plan is to continue and expand that. So definitely not, Bitcoin only or Bitcoin maxis, but a lot of respect for that. And basically, we don't want to decide for the market where, it wants to operate and which assets it prefers. We just want to bring our technology to make it usable. And, in the case of Bitcoin, unleash Bitcoin's value to be used for other things that are not just holding Bitcoin, which is a great thing to do, but you also want to do some other economic activities with it.
Right. Hong, over to you. Are you agnostic to the crypto sector, or are you trying to convince them to come over and build on Bitcoin?
At core, we look at it both as a way to provide security for the core blockchain in exchange for rewards paid to Bitcoiners as well as miners. And so there's a building ecosystem there where Bitcoin provides security. But on the other hand, on the Bitcoin yield side, that element of Bitcoin providing yield creates this building block, call it a financial instrument building block, where we're actually able to transcend crypto and onto all asset class investments. So not only are we looking at Bitcoin as the $1 trillion asset, or soon to be 2 or even 10 trillion if we all think it's going to a million, but how do we look at Bitcoin as a much better reserve asset, collateral asset against stocks, equities, or as Michael Saylor has now evolved this pitch into hundreds of trillions of dollars of real estate, right? So there are a lot of different evolutions of Bitcoin and utility, and I think we can start to look beyond Web3 and really look at how do we empower Bitcoin as a really productive asset across, all forms of investing and financial market instruments.
Well, speaking of productivity, Jeff, what are some of the use cases that are active on Hemi right now that you're excited about, or what are you looking to attract with the network?
Sure. For those not familiar with Hemi, Hemi is a layer 2 blockchain that combines Bitcoin and Ethereum into a single network. Some of the use cases that we're seeing most interest, energy, assets, etc. into is plainly Bitcoin DeFi. We started Hemi with a Bitcoin plus Ethereum thesis, and the market keeps pulling us into Bitcoin DeFi. I think there was formerly kind of the Bitcoin maxi mindset of I'm just going to have a hardware wallet, I'm going to store my Bitcoin in cold storage, and the new is the Bitcoin pragmatist. The Bitcoin pragmatist wants to hold and hodl Bitcoin, but at the same time, let's collateralize it and earn some more yield, or let's collateralize it and borrow and buy a house, like one of our community members, Matt Luongo, did and posted on X. And so it's that next stage of you have Bitcoin, now what, that Hemi's really leaning into.
Okay, so a use case, we've got financialization, maybe lending, borrowing. Muneeb, is that how you think about the use cases that you're trying to bring to Stacks, or that Stacks is attracting?
Yeah, so I think the way that we're looking at things is that there are these DeFi primitives that were really invented in Ethereum, and Ethereum deserves a lot of credit for it. And I think some of those primitives have been replicated on other chains like Solana, Avalanche, and they're very naturally getting replicated for Bitcoin DeFi as well. And that's certainly something that we're seeing at Stacks, where people are trying to build, stable coins that are backed by Bitcoin. They're trying to build Bitcoin lending markets. They're trying to build, decentralized exchanges where you can easily trade Bitcoin for stable coins and so on. So I think those base DeFi primitives are definitely the first things builders are building.
Well, Eli, over to you. I think the contention among Bitcoin developers really has been that there isn't a lot of use cases outside of Bitcoin that they're excited about. What are the use cases that you're seeing for StarkWare that you're excited about?
Yeah, so one thing that we have is a very good infrastructure layer for builders to use, 100% native account abstraction, a lot of live DeFi protocols. The technology has been the one that powered some of the most best perps exchanges and gaming teams out there, Immutable X, DYDX, and a bunch of others coming in, good AMMs, good DeFi, a very thriving gaming community. So there's a very solid stack for developers and folks that want to build. Now, the way we're approaching it, we want to service both, let's call it the more degen parts of Bitcoin, the ordinals, the runes, the BRC20s, the Taproot assets. We already have a bridge built by Jeremy Rubin's team for runes. And we actually launched USDC for the first time on runes using this, which is tradable today on Magic Eden and other places. We're partnering with a lot of wallets like Xverse and others. And the next thing is to tackle Bitcoin itself and make it, unleash its value, which means generating yield in a variety of ways, both bringing it into the DeFi protocols there. Also, we already have a proof of stake based L2. And we want to also have Bitcoin as part of the staking protocol, which means there's going to be at least two ways in which you can generate yield on your Bitcoin, in Bitcoin, both through participating in DeFi and by securing and operating the network while keeping it in a very self-custodial and safe way. So that's where we're heading.
Hong, question over to you. We're talking about use cases right now. So use cases that you're excited about that are either on core today or that might be coming to core in the future.
Yeah, so I focus on the institutional side, and a use case, and one of the reasons I joined Core is, how can we improve capital efficiency of Bitcoin as a reserve asset? Today, there are tens of billions, if not at some points, over $100 billion of Bitcoin posted as collateral, currently earning zero carry, oftentimes with negative costs from custody fees, management fees, etc. And what Core's been able to do is partner with Maple Finance to package and tokenize the dual staking mechanism, or our consensus layer, into a liquid stake Bitcoin token that earns yield in Bitcoin terms. That can now actually be used as collateral to borrow against to trade margin on exchanges. What that effectively does in real capital market dollar terms is unlock 2 to 3% at a minimum of additional efficiency while Bitcoin is posted as collateral, otherwise earning nothing. So on $100 billion, that's $3 to $4 billion of new capital efficiency gains. We think that is going to be the catalyst for the next wave of institutional adoption. And by that, I just mean, we're going to start to see more creative ways, more interesting ways of certainly, existing traders and Web3 participants start to utilize Bitcoin. But also, I think it's going to start to attract, folks from outside the crypto native world, from capital markets, to really gain a better understanding and start to really participate in blockchain in a way that they've never done before.
Yeah, there recently was a pretty mainstream, I think maybe breakthrough for Bitcoin L2's crypto exchange Kraken announcing that they're going to turn on Bitcoin staking for users. Is this the kind of integration that we're seeing? Is this kind of an important moment for L2s in terms of, this is a large business that is now trying to kind of use their Bitcoin and get yield on that and efficiencies? Is that something that we're going to see more of? Jeff, your thoughts?
Absolutely. We're at the early days of Bitcoin L2s and Ethereum L2s. We're also kind of swimming through the noise to find the signal a little bit. There are, at count, over 100 Ethereum L2s, over 100 Bitcoin L2s. And just real quick, going back to 2017, when there was an explosion of ICOs, I made the macroeconomic observation: when the token creation cost is zero, you're just going to get flooded with tokens. And that's what happened. But power law applies, and the 0.1% that remain after several years coming through Darwin's crucible of trial by fire are the quality. And similar with the L2s, right now, the cost of blockchain creation is zero, which means everyone in the room can create one, which is fantastic for innovation. But that also means, again, you're just flooded with a number of L2s, and we're finding where innovation works and where innovation doesn't. We're seeing, again, people wanting the DeFi primitives so that they can compose Bitcoin actions across lending markets and DEXs and cross-chain swaps, et cetera. And I think that that's only going to increase. And so the top 0.1% are going to achieve, exponential trajectory, and just like the top 0.1% of tokens.
Right, Muneeb, I think we're talking about, what's that breakthrough moment going to be like for a Bitcoin L2 or staking or some sort of yield being turned on for a mainstream business. I mentioned the Kraken example of, this is customer Bitcoin now that is going to be kind of earning yield, earning value for that customer set. What are you looking for in terms of those breakout moments where, we think you'll see real traction here?
Yeah, so I think the way we look at things is last cycle we saw a lot of like centralized players like BlockFi and others, Celsius, who were trying to give people Bitcoin yield. I think people got burnt by it, and they learned the lesson of the risk of centralized entities. And I think where we are in this cycle or this time around is that we do have decentralized options, but they aren't like fully battle tested yet. Right, like if you compare an Aave on Ethereum that is holding like close to $20 billion in assets, if you look at some of the Bitcoin deployments, I don't think that they're that well battle tested yet. So I think that traction is coming up, and I think one of the biggest things remains how safe it is to move your Bitcoin from the L1 to the L2. Like, what's the bridging solution? There's some interesting R&D work on BitVM2 and others. So one of the things that we think is a big bottleneck, and some of the work that we have done at Stacks, is how do we make this movement as close to self-custodial as possible? Because if you reduce the risk of actually deploying your Bitcoin into the L2, that's a big step that people need to take right now. And I think there are several efforts going in that direction, and we are working on ours as well.
Eli, I think the question here is, we've seen maybe some of these big centralized players, they're maybe looking at Bitcoin yield as an opportunity. I think the question is about this breakthrough moment, right? We have a lot of Bitcoin L2s. We can talk a lot about the consensus algorithm differences. We can talk about the governance differences, but I think people want to get a direction of, where are we headed? Like, what's success? And is this moment of maybe an exchange integrating something like an L2, is that success? What's success look like to you?
So to me, success will look like people, first of all, unleashing the power of their Bitcoin, but bringing it to new users, new communities in a way that is both safe and self-custodial, but at the same time feels like your Web 2 application. And I think for this, the way we're going about it is we are onboarding and have already a number of very interesting, diverse applications that are consumer facing. A lot of people that are using them aren't even necessarily aware that these things are running on blockchain. The UX is as good as it is for just your average, mobile app. And we have a bunch of those things, in the areas of payments, in the areas of social networks and consumer apps, in the areas of gaming. So the way I see it is that the next phase of people, there always will be, well, first of all, the investors, which we all try to cater to. There will be the builders that we try to bring over. There will be the speculators, the ones wanting to go on perps exchanges or trading meme coins. But we have to break beyond those three classes to, your mom, your dad, your kids, your friends. And for them, you need applications that are very usable, that drive value. And then I think the key unlock is just this good UX providing you the feeling that you truly own your life, right? You cannot be censored. You are the true owner of this thing. And my daily consumption is using the metal debit card by a company called Argent that just today announced that they're rebranding to a neobank called Ready. And all of it is over StarkNet. People that are going to be using this neobank are not even necessarily going to know that it's on crypto, but they will feel this very strong, true ownership of their assets. Same thing with 500,000 users of Focus Tree, another consumer app on StarkNet. Most of them are young students, high school students and university students. Doesn't involve any money at this point. They're just using it to focus. All of it is on StarkNet. We want to onboard all of those through the true sense of ownership of your life on a decentralized network where you cannot be censored and you own your life. So that, I think, will be the next wave that we're aspiring to.
Hong, the question here is success. We had talked about, the exchanges maybe turning on staking and starting to be serious about some of these yield opportunities that you're talking about. What is success? What are things that you're looking for out there?
Yeah, I think for us, success can be measured, in real terms, how much Bitcoin comes on chain or how much Bitcoin is participating in securing the core network. Where we look at success also is, are we where clients, Bitcoin holders are? Are we empowering them, creating productivity gains, creating new financial democratization solutions where they are? Whether it's Bitcoin savings accounts for the end user that wants to be able to preserve their assets in Argentina through their wallet app, or is it through my father-in-law who knows nothing about Bitcoin, but he would love to be able to borrow against it, or create some sort of additional productivity from Bitcoin, the asset, or even all the folks, and a lot of folks in this room who are actively participating in the space. We're starting to see Bitcoin truly become not only the genesis asset, the reserve asset, but also a building block for new financial products. And we touched on a lot of that, whether it's ZK, we can extend into it, or finding ways to build communities and builders, giving them a way to access Bitcoin security. For us, I think if we start to see Bitcoin become productive on chain in a way where it exceeds 10 billion, 20 billion by the end of the year, it's a really positive signal, and for us to start to see hyper growth starting in the next as early as Q1.
So I was on stage earlier today with Peter Todd, Bitcoin core developer and pretty big
Satoshi.
naysayer, possible Satoshi, and he admitted that I asked him what in the crypto world excited him. And he said, Polymarket is an interesting example of what he saw as a mainstream application that, was using a crypto network, right? Using the Polygon network. So the question, I guess, is what's preventing something like that from happening on Bitcoin, right? So this is an app that received pretty large mainstream support during the election cycle. Obviously, Peter, thinking that maybe that will be a more centralized solution might outcompete that in the future. But what's preventing an app on Bitcoin from reaching this scale, Jeff?
Well, there's the technical answer, which led to many of us building L2s on top of Bitcoin, which is fundamentally Bitcoin script itself only validates a very tiny set of programmability rules. It's far less expressive, far away from the Turing test in terms of complexity, and as a result, you can't build Polymarket in Bitcoin script. So your options are either A, build it off chain and have it validated off chain, or B, build an L2, or C, just tell people jump over to Ethereum. It can't be done. And Bitcoin script itself, incredibly limited, very secure, bomb-proof. But again, it doesn't have self-sovereign contract addresses and programmable logic directly attached to those which actuate on a Bitcoin transaction. I know that's a bit technical, deep dive, but fundamentally, Bitcoin can't do it. It can't do Polymarket all by itself. And so are we going to go off chain to like two dudes in a garage running a server and we're going to trust that? No, we're going to trust, an L2 or something of that nature where it's running, it's provable, it's a much more neutral, uncorruptible referee.
So Jeff's answer is scripting language. Muneeb, why haven't we seen a breakout kind of Polymarket app on Bitcoin? What's the barrier there?
I think it's a little early in the evolution. Like if you compare it to how Ethereum L2s evolved, like it was 2018 or something when a bunch of them got funded. They work on their mainnets, then not everything's going to be successful. People run into different challenges and so on. And I think we're seeing that market cycle play out a little bit on the Bitcoin side. Roughly like a year and a half ago, a bunch of projects got funded. They're trying to go mainnet, so some of them are being more successful than the others. So it's like sort of like that natural selection process happening, but still at the platform level. And I think you need to start building really mature developer communities. And I think that's the place where some of these ecosystems are now entering. Stacks has been around for a little longer, so I think we have a more mature developer community in some ways. And I think that then starts to translate into, okay, what are these guys building, and is it finding product market fit? and can take off from there. So I think Polymarket on an Ethereum L2 is a great example because they already went through that evolution of having that developer density where some of these things are finding product market fit.
So we've got developer community, we've got scripting. Eli, what is your assessment of why there hasn't been a mainstream breakthrough for a L2 app on Bitcoin?
I'll go with what Jeff said. It's about the lack of expressibility. But even now that Bitcoin L2s are emerging, first of all, I'll say that we saw early indications of the demand with all of the, Bitcoin assets, right? The runes, the ordinals, the BRC20, the, Taproot wizards kind of stuff. So you see that there's demand for all sorts of new activities on top of Bitcoin. But indeed, the limited expressibility of the Bitcoin script means that it's a little bit hard to deploy these things. Even if you look at Polymarket, why didn't it emerge, right? Ethereum is 10 years old or so. Why didn't it emerge?
2015, yeah.
Yeah.
It went live on beta, yeah.
Right. So it took some time for it to emerge. Right now, you're seeing like the early whiffs of NFTs and stuff like that. So I think with more bridging and secure bridging, and of course, things like BitVM, and hopefully, I'm a very strong supporter of something like OpCat because it will allow us to truly settle StarkNet directly in a self-custodial way onto Bitcoin with cryptographic security. So just to explain to the audience, right now, most of the L2s, the way you basically, because you don't have the expressibility on Bitcoin, you have to pass the assets through some bridge, which is a multi-sig. That's one version that exists today. Tomorrow, hopefully, BitVM bridges. So we're collaborating, for instance, with Alpen Labs and also with Citria. There are a lot of exciting things there. The bridge there, to understand, it will give you economic security, right? There'll be some bond that can be confiscated easily by the miners if you deviate, but it's still just the economic security of the bond. Now, if you have something like OpCat, then you can now have full cryptographic security for something like StarkNet that uses EK Stark proofs. And that is, to me, the holy grail. So it'll take a while for this expressibility and safety and trust to arrive.
So we've got two answers for scripting. Hong, over to you. What do you think is the blocker for a mainstream app like a Polymarket on Bitcoin?
Yeah, I'll actually just follow up there. As a commercial guy, I'll take a slightly different approach, which is the sort of Michael Bluth subscription of sell what's on the banana cart. And while these new upgrades like OpCat and BitVM are really exciting, right? There are ways that, for instance, Core is already utilizing existing Bitcoin technology in order to be able to build alongside Bitcoin. How many people know about time locking?
Time locking. How many people have time locked their Bitcoin?
So we've talked a lot about the term Bitcoin
Malcolm.
staking because it's been so synonymous with Ethereum and proof of stake, right? But what Core has done is Bitcoin actually has a smart contract function to check lock time verify. It's been out since 2015. It's used by Lightning as a way to essentially add metadata to the Bitcoin transaction. And that's what Core uses. Every time lock transaction, think about it as a native HODL function on your Bitcoin. Everybody talks about hodling their Bitcoin. You lock it up, set a timer, doesn't matter what it is, and it remains locked on the Bitcoin blockchain until that timer expires. So it's an immutable function, but in that transaction, you can actually append about 83 bytes of data. There are some upgrades that have been proposed to expand that, but it's just enough for Core to use it as a way to vote on Core validators, thereby securing the network, and an EVM address to receive Core rewards. So that value exchange is a very simple concept, but that has now given Bitcoin an additional utility as a way to secure another network to earn rewards for the participant. We use the same mechanism for miners. Today, 3 out of every 4 Bitcoin mined is actually participating in securing Core and earning rewards, which enhances the Bitcoin security budget. And so now you have a mechanism for Bitcoin to be productive, add security to another chain like Core, and for all the builders that are looking to grow real, long-term businesses, Polymarket keeps coming up. So I use the same example. Someone on Polymarket can now, or a Polymarket can now also build on Core, be Bitcoin aligned, capture all the security from Bitcoin, but also through additional incentives and economic distributions, actually be able to become compensated in addition to the bid ask and transaction fees they generate. So I think there's a lot to look forward to, but really exciting what we're seeing today is using something like time lock to be able to make Bitcoin more productive. And as these new upgrades come about, certainly, we're all kind of excited to see how we can build and evolve the interactions, but certainly we're creating these on-ramps that help Bitcoin become more accessible to the masses, and I think that's all something that is really exciting for us.
Well, you mentioned something there that was a subject of recent controversy I wanted to address, which is Citria has kind of become one of the more well-known kind of Bitcoin layer 2 projects, but maybe not for the right reasons, right? Was sort of embroiled in this kind of subject of whether they were trying to change Bitcoin. So I guess the question is, to what extent do your solutions, are they thinking about changes to Bitcoin? Do they rely on them or not? Or are you building sort of around the Bitcoin base layer, just assuming that it's ossified? Jeff?
I think it's a huge business risk to assume that Bitcoin's going to change, so we assume Bitcoin's not going to change.
Muneeb?
Same thing, like all of our designs assume Bitcoin is not going to change. So if something like OpCat or something else happens, we can benefit from it, but we absolutely cannot rely on any upgrades to Bitcoin.
Eli?
We're building for 3 stages. Stage 1 is live, which uses multi-sigs for both Bitcoin assets and for the other kind of asset. I mean, for Bitcoin itself and for the assets. Step number 2 is in collaboration with Alban Labs and other BitVM bridge. Step number 3 is, advocating, hoping for OpCat, and then you have full cryptographic security. But, there's a lot that can be done even today and also tomorrow with BitVM stuff.
So Eli, sounds like you're maybe a little bit more optimistic. Hong, are you building sort of around? Are you assuming that Bitcoin is ossified at this point?
Yeah, again, we're leveraging Bitcoin as is today for providing security and yield to participants in the network. Certainly, Brendan was on stage earlier. We're looking at a number of projects that are working around BitVM and OpCat, and looking at other forms of security implementations around Bitcoin. Right, quantum obviously is a big topic. We're looking at obviously future threats, but at the same time, there's so much that we see in front of us with Bitcoin as the genesis asset, as the largest market cap asset in digital assets, that the opportunities are really abound in terms of how do we take something that has been sitting idle but performing so well for so many, whether it's an investment portfolio or as a store of wealth, and how do we actually make that even more productive and make it in a way that doesn't change the ethos of Bitcoin, doesn't risk Bitcoin principle, and that is actually additive or accretive to the ecosystem, both Web3 and traditional finance.
On the subject of yield, I wanted to bring up a trend that's kind of emerging, which is that you're seeing kind of these for-profit kind of public companies kind of come out and advertise yield as a product. I'm talking about kind of these strategy copycats, right? So Michael Saylor generating yield for users, but there's no technology risk, there's no smart contract platform behind that. Jeff, how do you look at what is happening on this corporate treasury side? Is this providing yield to the market? Is this competing with some of these L2 type structures? How do you think through that?
It's providing yield, but it's providing yield for people not in this room, for people with $100 million levels of assets and stuff like that. DeFi is for everyone, and it provides yield whether you have $10 or $100 or $100 million. And so it's very, very flat, very egalitarian, and it's bringing institutions into into Bitcoin in new ways, which is obviously selfishly, if they're coming into Bitcoin, they're accessible to Hemi and Stacks and StarkWare and others. And so I think that's a net positive that he's buying a lot of Bitcoin. there's risk in everything, and he's doing a trade that has risk, and so is there a potential downside for him that impacts the market? Question mark.
Muneeb, your answer to this, do you think that this, obviously we're having yield, right? The market wants yield. It seems like it's getting it in a centralized fashion. What's your view on that?
So I think I would separate things into two over here. The market definitely wants yield, right? Like people who are sitting on a lot of Bitcoin, they want yield, but they want it in a very sort of like risk averse sort of way. And I think that those opportunities are fairly limited. What Saylor is doing is something different, right? Like he's trying to optimize like Bitcoin held per share and calling that Bitcoin yield, right? So it's almost like a financial metric. The Bitcoin is actually not earning any yield. Like he's just trying to get you more Bitcoin per ownership share. So those are two separate things. There are some other public Bitcoin treasury companies that are coming up that might actually deploy some of that Bitcoin to earn real yield. I'll give an example from Stacks. Like it's one of the only assets out there that actually earns a BTC yield. So when you lock STX and consensus, you earn a yield. And people are coming and talking to us about hey, how do we earn yield from our balance sheet if you actually want to earn like real Bitcoin yield, not just like a financial instrument.
Eli, over to you. The question is, what's happening on the corporate treasury side? Obviously, delivering yield, is that competing against some of these DeFi platforms that are maybe trying to offer something similar?
Yeah, I think strategy is one kind of leveraged bet on Bitcoin. And I think a lot of what is driving it is people waking up and saying, holy shit, Bitcoin is now 100,000. I missed out on it. What can I do to, retrieve this 100x that my friend, my neighbor got? And it's too late for that. So I think that's a big driver of what you see with a lot of these public company strategies, which is fine. But I want to remind everyone that in the end, value is very much tied to utility. And right now, the utility of Bitcoin is in being a scarce asset that everyone cares and loves. But it can also be further unleashed, this sort of value, right? It's like energy or potential, and it can be unleashed. And it will be unleashed, unfortunately, not on Bitcoin itself, right? Because Bitcoin is very limited. It will be unleashed elsewhere. And all I want to say is that there are going to be other places or other kind of leveraged bets on Bitcoin that are worth looking into.
Hong, over to you for your final thoughts. You've been talking about yield a lot in this panel. How are you looking what's going on in the corporate markets? And is that something that is comparable to what's happening on the L2s here?
Yeah, it's absolutely exciting. I think this is the next breakthrough. If Bitcoin ETFs are an indication of capital market interest in crypto and Bitcoin yielding ETFs is going to be the next big product, right? Where you now, if you're able to have Bitcoin as the best performing asset over the last 15 years, add yield onto that, then Bitcoin starts to replace fixed income. Bitcoin starts to generate free cash flow for asset managers that otherwise look at it as a risk asset. In layman terms, all of us, if we're looking at bars of gold, we'd all love for our bars of gold to be spitting out more gold every single day. And if it doesn't, and if it can, then you look at your bar of gold and you wonder, hey, do I have a dud piece of gold? So I think that's the sort of way we look at Bitcoin is there are ways of Bitcoin becoming more productive, and to Muneeb saying like, if it also generates yield in Bitcoin denominated terms, why wouldn't you want that versus Bitcoin without taking on counterparty risks of the BlockFi Celsius and sort of the last generation of yield, so to speak.
All right. Well, this has been Where to Build on Bitcoin. I want to give a quick summary and thanks to everybody on the panel. You can find out more about their prospective projects. Again, we've got Core Network, Hemi, Stacks, and StarkWare. You can find out more information about them online and, of course, on the Blockworks website, blockworks.co. Thank you for the panelists. Let's give them a round of applause.